Welcome grade 10s. Yes, busy with the section on the final accounts. And we have now completed our second final account, namely the profit and loss account. And what we now have to do is to look at this account and see what does it look like. Okay, grade 10s, this is your profit and loss account, and in your profit and loss account you've transferred all your incomes to the credit side and all your expenses to the debit side. Once this process is complete, remember, if my incomes are greater, that means the business has made a profit. Therefore, you will now transfer this profit into the capital account of the owner, thereby making the entry as follows. Okay, so remember, the profit is then transferred from your profit and loss account into the capital account of the owner. And what are we now left with? Yes, in the capital account, you commence with your balance. You transfer the profit from your profit and loss account. And then you transfer the drawings into the capital account. And you now balance the capital account to give you the new balance on your credit side. Remember, this is in conformity with the business entity concept. And what does this concept tell us? That the owner and the business are two separate entities. In other words, whatever profits are made by the business, this has to be transferred to the owner's personal account, namely the owner and the business are two different entities. So in this way, you can see that by transferring the profits into the capital account of the owner, it increases the equity. Here's the example of the equity increasing, and therefore the business now owes the owner more. Let's take the other scenario now, where the expenses are greater than our incomes. Okay, grade 10s, here goes. There's my profit and loss account. I've transferred all my expenses onto the debit side of the account. Remember, by means of a closing transfer. I've transferred all my incomes onto the credit side of my profit and loss account, again by means of a closing transfer. What I now look at, and I see that my expenses are greater than my incomes. Therefore, in order for this account to close off, I need to credit my profit and loss account. There's my entry. I'm crediting profit and loss, and I am debiting my capital account. Notice that this is the contra entry. I'm transferring, there's my entry, a debit in my capital account and a credit in the profit and loss account. Now, that results in my profit and loss account now closing, but let us now look at the impact on my capital account. In my capital account now, I have my balance on my credit side. The reason, because it's an equity account. On the debit side, I've transferred my loss. There's it coming in, showing you that losses decrease the owner's equity. Remember, I have to also bring in my drawings. So there's my drawings, which I transferred from my drawings account into the capital account. Remember, that is step number 8 of my process. The capital account is now balanced, and you will notice that your capital account as a result of the loss decreases, and therefore we can clearly see that the loss of the business has impacted on the equity account of the owner, meaning that the business owes the owner less money. Right, so now if we have to summarize what we have said about the final accounts, let us first make a few points. Point number 1. Capital is the amount that has been invested by the owner. And we all know that this is the amount that the business owes the owner. And we also know that profits will increase the capital of the owner, as we have seen from what we have done to date. And obviously, drawings, what the owner has taken during the year, will decrease the equity or the capital of the owner. We also know the balance on this account here, namely the balance on the capital account, will now reflect what the business owes the owner at the end of the financial period, or the end of the financial year. Now remember that having completed this process here, we will now use the figures that we have, and all these figures that we are left with. In other words, which accounts are we left with? We're left with the asset accounts, we're left with the liability accounts, and we are left with the equity account. And we all know that the equity account is the capital account of the owner. This will now be used to draw up what we refer to as the post-closing trial balance. Remember that the net difference between our incomes and our expenses, so the net difference between our incomes and our expenses, that is either the profit or the loss, right, was transferred to the capital account, and we also transferred the drawings into the capital account. And in terms of our ledger, we have now completed the process for the financial period. So this, grade 10s, is the procedure that is followed year after year after year. Okay, grade 10s, the question is, which GARP concepts have we applied to the year-end process? Obviously, we're not going to discuss all of them, just one or two to make you see the relevance of these concepts. Number one, we have applied the matching concept. And remember, with the matching concept, we have matched our incomes and expenses against one another, and therefore we determined whether we had made a profit or a loss. We also then applied the business entity concept. And how did we do this here? By transferring whatever there was, a profit or loss, to the capital account of the owner. Right? And yes, we also applied the prudence concept when we applied these by using our adjustments. We have put into place the prudence concept. Okay, grade 10s, that's it from me, Ashraf Patel. Until our next lesson, keep your feet on the ground and reach for the stars. Goodbye.